Welcome. We are back charting. You know what we do. Look through assets, go over Fisker, go over Bitcoin, any stock, any crypto. If you want me to look at something, type in the chat. I was a couple minutes late today because I was trying to get my tip page set up. I'm not doing any paid group. I'm not monetizing or running ads on my stream, but if you want to tip me for whatever reason, I finally got that set up because I've had a few people contact me about that. Even had a sorry about that. Had a couple people like DM me asking to pay for like financial advice and stuff. I'm like, no, I don't do that. I'm gonna just do what I do, and if you want to support me by either watching or tipping me, that's completely your choice. Otherwise, hit that subscribe button. Keep coming out. We're gonna keep analyzing no matter what the circumstances are, and we're gonna kick things off with Fisker, which had another crazy day. But yeah, if you want me to look at any asset, just drop it in the chat and I'll take a look. But to start it off, Fisker, um, you know, if you know, you know, posted it at 896 with a bullish butterfly on the daily. It hit the pattern completion zone of that bullish butterfly, and since then, it's been fireworks. It's been taking off. Today, you had a crazy run up, like, let's see. So you opened, I think, over here, and you ran a pre-market, and then you ran like 16% today. So like you almost went up to 20% on Friday and almost went up to 20% today. So collectively, like 40% since the pattern completion zone. Thank you for the support, Ben. Great to see you in the chat. But yeah, Fisker is still looking good. But obviously, as I've been saying recently, the biggest risk for Fisker and literally any asset on the market right now is the fact that we have elections tomorrow. And whether Biden wins, whether Trump wins, whether we have to wait a while to see who wins, each different scenario can affect different assets and the market as a whole. So you need to be cautious of that. But in terms of the technicals on Fisker, I do like that your daily is starting to go back towards green on your MACD. There is no divergence or anything, but being in the green on your MACD is always a good thing. And as you can see, it's starting to inch towards green. Probably not going to see green tomorrow, but if you have a good day tomorrow and the day after, you can see a MACD crossover, which is good. The bullish butterfly looking great. It's a pretty simple pattern after you chart it. Trying to chart the pattern is extremely complicated just because of how rare it is and how many different pinpoints are on pattern. But after you have it charted and it bounces where you want it to bounce, you just wait till the targets hit, or if they don't. But in the meantime, of course, you want to optimize your position and manage your risk. So in terms of the 4 hour, you obviously gapped up at open. That gap has not been filled. I do not know if it will fill. I will take a look at CanC right after Fisker. So thank you, Un-Asian, for the chat. But yeah, in terms of Fisker, you have the bullish butterfly on the daily. On the 4 hour, you have a downsloping channel where you bounced off the demand line, and you have classic bullish divergence on your MACD, which is obviously all great. But one thing I did notice, even though we did run up to 1249, which is where you had support on September 4th and September 24th, you ran up to test your previous support and flip it to resistance today. But after you fell back down, a thing I noticed was, unfortunately, after breaking the 200-day moving average, which is like this blue line over here, you broke it for a bit, but you couldn't really hold over it or get a candle close confirmation over the 200-day moving average and over the 1181 resistance. So once I saw that, I tweeted out, be careful. I think we might be pulling back to the lower 11 upper $10 range, and that's exactly what we did. My support level was 1088, and as you can see on this candle, you literally back tested, I think 1088 exactly. 1089. Okay, you were one cent off. You hit 1089 and then you bounced up another like 30 cents or so. But yeah, not a terrible close. The simplest way that I'm perceiving this chart is that if the market, the general market, is doing fine, I think we're gonna retest 1181 tomorrow, and if we break that, we're gonna retest 1249. But if the market does take a hit tomorrow, the support levels I'm looking at are 1088, which was your resistance right before the crazy run up in July. After you broke that, you went up 100% in like a few days. But 1089 can be flipped from resistance into support as we saw today. If that somehow breaks, you have a gap fill. If you look at the gap on the daily chart, the gap down is only to about like 1066, as you can see. But if you look on the 4 hour, it will be till 1039. So your two resistances under 1088 is 1066 and 1039. And you really want to hold 1039. 1039 breaks, obviously. You have the psychological support of $10. So there is a decent amount of support under you, much more support than you had in the lower 9 region. So that's definitely a comfort zone, I guess. Being above 10 in general is a good thing in my opinion. And then the 1 hour, you broke out of the descending broadening wedge. You had triple MACD classic bullish divergence. And now your MACD is starting to wane. It could go back up again, it can drop down. I'm not too worried about the 1 hour, and it still looks fine. So I think market does well. We could retest 1181 and 1249. The market doesn't do well. 1088, 1066, 1039, and $10. 4 different supports, all about 25 cents apart. So we definitely do have some decent support levels on Fisker. So now I'm going to look at a crypto called KNC or Kyber Network. But if anybody out of the 11 people here wants me to look at anything for them, just drop it in the chat and I will take a look. So KNC. So I did have KNC charted, and you were pretty much just in this range between 85 cents and $1.05 for a really long time, and it was just really neutral. So basically the measured move of a neutral pattern like that is you take the support to the resistance, which was 23%, and then you put that on the top of the resistance and the bottom, and whichever way you break to, that's the measured move of where you could be headed. So unfortunately for KNC, it did break to the downside, which is obviously not good. So you've already fallen 10% since breaking to the downside, and you know, you could see 65, but usually the measured move doesn't really achieve. Usually you get like 75% of the way there. I will take a look at PLTR. Thank you for the chat. But yeah, in terms of the current technicals, you kind of have some 4 hour RSI classic bullish divergence going on, where you are making lower lows on price, but you're making higher lows on your RSI, which is of course a good thing, but you don't have that on your MACD. I don't really see any structure here, if I'm being honest. Not really, not on the 4 hour. So you have that 4 hour classic bullish divergence on the RSI. Let's take a look at the 1 hour and the daily. Pretty much the same exact looking structure, just making lower lows, not in the best trend currently. And you just crossed over to the red. So, and then on the daily, you could make classic bullish divergence eventually, which pretty much means you're going down in price. As you can see, this thing dropped from like $2 all the way to 75 cents. So you're obviously going down in price, and since your last negative momentum island on your MACD, you're currently at a higher low, but who knows how like low this MACD histogram can go. But it would be nice to see at some point it turn back to green. So for example, if you saw something like this, where if you went like that, then it would be good. Then you'd have classic bullish divergence on your daily. But of course, you don't have anything signaling that the histogram will turn around anytime soon. So the verdict on this chart is probably just wait. It's not terrible, but it's by no means great. And there's really nothing implying that right now is where the price is going to reverse. So I'd say just wait for an edge on the chart before entering, I guess. And if you are already in, probably just be careful. A thing you do have going for you is you are right on, unfortunately you're a little bit under it, but you're right around that 76 cent resistance you had in May of this year. You could have flipped that into support, but currently you're under it, so you definitely want to get back above 76 cents. But yeah, that is KNC. Now we're going to do PLTR and then BAE systems. So this was a newly IPO'd company, and then alright, that looks like it. Do you want me to be looking at the BAE with the SY after it or the SF after it? I'm not too sure. Just give me a little bit of a confirmation in chat. But until then, we're going to look at PLTR. If I'm going to be completely honest with you, there is absolutely nothing on the daily, so I can't really analyze that. Again, on the 4 hour, not too much. Not, you could call this it's kind of a cup and handle in the sense that you obviously made your cup and then you made your handle, but the issue I'm seeing here is this area right here kind of messed up your cup. When you have a cup and handle, you just want to have a nice rounded bottom. You don't want to make like a little pump in between and then start rounding out again. So that's not the best, I guess. Can't really call that a real cup and handle. And I'm trying to delete this. And then obviously really not much on your oscillators on the 4 hour. But the 1 hour is actually looking good. You have hidden bullish divergence. The ticker is just BA. Alright, let me fix that then. Because BA in America is Boeing. So, alright, I'm gonna go with this one. BAE systems is the same thing you requested. So I'm just gonna go with that, alright? But let me just finish up PLTR real quick. Hidden bullish divergence, which means you made a lower low on your MACD, and it's about to go back to green, literally inches away. So the MACD is looking good on the 1 hour, and you also have hidden bullish divergence on your RSI on the 1 hour, where you made a lower low on price from here to here. Ooh, actually no, I messed that up honestly. Wait, so you made it a lower low, but no, that would not work. From if you use it like this, maybe. If you consider those the two lows on your RSI. Yeah, you could probably consider that hidden bullish divergence on the RSI as well. So the 1 hour oscillators look good, and you also have a gap to fill at 1074, so you could definitely see that in time, especially with the divergence on the 1 hour. And still not much of a pattern. You did bounce off of a pretty much a golden retrace, the 0.618 Fibonacci retrace, and that was where you reversed. So as I say all the time, take account for Fibonacci. The golden retrace is a place where the price reverses quite a bit. But yeah, if I'm being honest, you're kind of like bear flagging. It's like you have bullish oscillators and you bounced off of a golden retrace, but like the pattern on the chart is just not great. Like over here it was good. Oh, that was really, really bad. Whatever, you get the point. You had a double bottom back here, and your neckline was that, and then when you broke that, you ran up even more. Just for education, the way to target a double bottom is you go from the bottom of the double bottom to your neckline, and then you place it over, and you already hit the measured move of the double bottom. So over there was definitely a great place, but over here, although the oscillators look fine. It's on the 1 hour chart, and usually the oscillators on the 1 hour chart are not as reliable as the 4 hour and daily. And then on all of the time frames, you just don't have a great pattern. So it's just kind of neutral, if I'm being honest. But that's PLTR. And then Ben, I'm gonna go with this one, unless like you really don't want me to. It's just like the only thing I'm seeing, because if I put that in, you just get two different options. And they are kind of similar in how they look, even though the prices are vastly different. The actual patterns on them look the same. So I'm gonna go with this one for BAE. And while I'm doing this, if you guys want me to take a look at anything, just drop in the chat and I will do just so. But here is BAE. I'm gonna start off with the daily and then work my way down. OXT and Link, I got you. What's the price of OXT right now? Man, I'm actually down a little bit. I just bought some OXT like half an hour ago, and I'm down a couple percent. So I will look at OXT and Link right after this. But BAE, just trying to fix my audio. Alright, that should be fine, I guess. So you are returning to pretty much your only support you have down here at 1979. So you're in that general vicinity, and you do not have any divergence on the daily, and again, not much of a pattern. No divergence on your 4 hour either, and there really isn't any pattern. Like, I'm just being straightforward. It's just a straight line down, and personally I never really trade straight line up, straight line down. I like to trade the patterns just so I know what resistance and what support I'm looking at. And then on your 4 hour, no divergence. On your 1 hour, you have classic bullish divergence on your MACD, but not on your RSI. So you made a higher low on your MACD, and then while you made that higher low, you made a lower low. So classic bullish divergence, you could probably argue that it's already playing out. It already turned to green, and since it did turn to green, you are up 3.5%. So it could keep playing out. But I'd say probably wait for a pattern on this one. And if you do get a pattern and you start getting divergence on the 4 hour and daily, 23 is a pretty big resistance. The issue is just the $19 to $23 area. There's just nothing to really work with. It can truly just go either way. So now we're going to go back to crypto, looking at OXT and Link. Some very popular cryptos currently. I've traded both multiple times. And in the meantime, if anybody wants me to look at anything, drop in the chat. So let's go with OXT first. Let me start off with the 4 hour. In or on OXT, you are in a descending channel, and you kind of have like a fake out to the downside. You kind of broke out of it right here, but then you got right back in, so it's just pretty much a fake out. And then you came back to retest the demand line on OXT. You retested it right here, and you had such a good double bottom, which is why I got in. I even like charted and everything, like just to show you guys. Pretty sure it's pretty obvious, but you had one low and then you had another low on OXT. Pretty nice double bottom at the bottom of a channel or on the demand line of a channel, and you hit the neckline, which was about 22.47 or 22.5 cents, and you pulled back, and since then it's just been dumping down like almost 10%, I'd assume. So yeah, if you were able to break the neckline, you could have seen like 24.5 cents. But this thing is just selling off already. Ladder in for the V-shaped recovery. Is this I think I don't know if you're hold up. That profile picture looks so familiar on Flippo Fontana's YouTube chat. I feel like I know him from somewhere. Like not in person, but like on the internet. That's interesting. But yeah, the wick is always going for those laddered buys and laddered sells. I don't know if you are. Alright, let's just get back to the topic at hand, OXT. Bouncing off of the demand line, and you almost had a double bottom, but it's selling off. So you have 1 hour left on your 4-hourly candle. The goal right now is to get as high as possible to get back towards that neckline. It's just terrible price action, quite honestly. I'm not down too much. I'm down like 1.5% because I did buy in on the pullback. But yeah, you do not want to hang around this demand line for too long. You really want to bounce off of it like you initially did. No divergence. Actually, yeah, no divergence on your 4-hour. And no divergence on your 1-hour. So this is super simple. You just want the price to get back towards 22 cents, and you do not want it to fall under 20 cents on OXT. Then we are going to look at Link. After Link, we are going to look at Pen, and then after Pen, we're going to look at HYLN. So let's move on down to Link, which is right here. Okay, so Link is kind of in this upsloping channel. It's not really a rising wedge. I just consider it an upsloping channel. And you're at the demand line of it, and you are also at a critical support level, which is where you found or resistance on August 6th before you had to run up all the way to 20 bucks. And then you have also found support at $10.31 on October 10th and October 16th. And then you fell under it a little bit, but you pretty much bounced off of it on October 20th. So pretty much all last month you were using 1031 as support after you finally broke it. And you did have classic bullish divergence on your 4-hour, but it already played out. As you can see, you went from 10 bucks to 11.65, so about over 10%. So yeah, I mean, it could reverse literally right here. It's at a critical support and on the demand line. There is no divergence to help it out though. What I really do like though is look how many higher, like super clear higher lows they're making. So this is, alright, shout out, man. Shout out to the homie. Is this kind of like 3 rising valleys? Do you know what I'm saying? Let's see. I feel like it was, but basically you're just making higher highs and higher lows. And, you know, this is an area where you could definitely reverse again to the upside. So I do think the trend is pretty bullish, for sure. Consistently making higher highs. It was like 3 rising valleys, but usually in a 3 rising valleys, you just keep going up. But also you could probably reverse right here. So the story on Link is reverse like right now, or if you break 1031, probably no major support until like 820 or 830. So yeah, right now Link is in a very critical area and it needs to bounce. Wait, why did I just take Link off my watch list? What? Let me just add that back. Alright, so that is Link. Now we're going to look at Pen and then HYLN. And I just want to keep the list going. So if you want me to look at anything, type in the chat, and when I'm done with Pen and HYLN, I will take a look. But yeah, Link not looking too bad, honestly. Just one last thing I want to look at on Link. It is also right around a golden retrace, a 0.618 retrace. So I actually think Link looks pretty decent. You just really want to hold 10 bucks. You do not want to fall back under 10. You want to keep making these higher lows. But yes, move on over to Penn. Penn National Gaming. And this thing is on a tear, bro. From, oh my gosh, from $3 to 75. So the first thing I do when I see a chart like this is I use Fibonacci. From your high to low, you're approaching a 0.382. And one thing that could have actually helped you identify this sell-off before it happened is you had classic bearish divergence. You made a higher high on price with a lower high on your MACD, and you also did the same exact thing on your RSI. So yeah, a lot of buyer exhaustion happened around $75, and since then you were down quite a bit. No edge to buy right now on the daily chart, but on the 4-hour you have classic bullish divergence. So let me just clean up that stuff from the daily real quick, and you actually have pretty nice looking, not bad, nice looking classic bullish divergence on your 4-hour chart. In terms of a pattern, it just really is like a rounding top, just a straight line down, just been selling off like crazy. But the 4-hour divergence looks good, and the daily if you reverse right here, you could make hidden bullish divergence on the daily, but it's way too early to call that. It could just keep on falling down. I'm just saying if it does start to find some demand here, wouldn't be terrible. But if I'm being quite honest, I don't know, man. If this thing looks like it had a crazy run and it's ready to pull back to like a 50% or a 618 to probably retest the 200-day moving average at some point. And you also, no, not really. Don't really have any divergence there. But yeah, not much of a structure, just a crazy run up and now it's selling off. So I'd probably say just wait until you see a new structure or some divergence on your daily chart. So that is Penn. We're going to look at HYLN. If you want me to look at anything, drop in the chat. I actually already have HYLN on my watch list, or I should at least. Yep, I do. Ooh. So HYLN is back at a pretty decent support. You used it as resistance in the end of June and then used it as support in the end of July. And you ended up running from $18 all the way up to $60, man. And you are all the way back to $18. So right off the back, this is a place where it can bounce. What I don't like is you fell under your 200-day moving average. Never a good thing. There is no indicators on the 4-hour oscillators at all. Just extremely flat. IPOB. I will be taking a look at that next. So yeah, that is your 4-hour. Ooh. The daily chart has extremely clear hidden bullish divergence. Like, it really cannot look better than that. You're about to go back to green and you're at a critical support, so you could easily see a bounce off of this level or somewhere around this level. What you really want to do though is get back above the 200-day moving average. But yeah, in the long term, the chart looks completely fine. This does look like a value area to buy in for a long-term trade, but you want to see it get over the 200-day moving average. So just keep an eye out for that. Now we're going to look at IPOB. First of all, let's see what retrace it's at currently. Really not at any retrace right now. This is probably a good value area. It's your 786 retrace, and you found support here twice. So 1408 could be a good bounce area. And you do not have any divergence. And you're not even oversold yet. The 1 hour does have classic bullish divergence, but it's like extremely small in the 1 hour chart. So I don't know how much you want to take that into account. But if I'm being honest, what this chart is kind of implying is you might get like a little bounce with that 1 hour divergence, maybe just to retest like this little resistance at 1630, and then it kind of just looks like you might keep falling down. But then at $14 you could maybe get a good buy for the long term, but nothing is really implying that this is going to start reversing to the upside like right now, except for maybe a little bounce on the 1 hour chart. So just be careful with this. Doesn't look too great in my opinion. Just a pretty bearish trend with no clear signs of reversal yet. So now we're going to look at ADMP. Adamis Pharmaceuticals, 71 cents currently. I'll tell you right away, the macro trend is not great. Oh my gosh. Yeah, whenever I see wow. Does this thing just keep on going up? Alright, so 1842 was your high, and then you're now at 75 cents. So in terms of a macro trend, obviously not good. All this is pretty much done. Over time is lose money. So I would not recommend holding this for a long time. I will add Docu to the list. Thank you, Print, for the chat. Would not recommend like holding this as a long-term position. But you're kind of using the 200-day moving average as a very nice support. As you can see, you've tested it 3 times now, and every single time you've bounced off the 200-day moving average. No divergence on the daily. And who knows, maybe if you keep on rounding out, you could get like a double bottom, where you go like that. Again, this is just me trying to throw something onto this chart because it just doesn't have a lot. This is just more for like education, I guess. But if this thing does have a rounding bottom, $1 could be the resistance. Also, $1 being a psychological resistance. But let's see how the 4 hour looks before we get too ahead of ourselves. And the 4 hour doesn't look bad. You have hidden bullish divergence on your MACD and on your RSI. Let me just try and make that look a little bit better. Which means you made a actually I messed that up, I'm sorry. You did not make a higher low on your price, you made a lower low. I thought I could like do it from here, but I was starting over here. So no divergence on the 4 hour, I'm sorry, I messed that up a little bit. Nothing else on the 1 hour. And again, I'm never gonna be somebody who's just trying to please people and say whatever their request is gonna go up like crazy. I'm just here to relay the chart to the person who's requesting it. And unfortunately, a lot of the charts I've been looking through today just don't really show a major bullish edge right now. And honestly, 90% of the charts I've been looking at lately don't show a major bullish edge. Like, you know, in the past 6 months or 5 months, so many different cryptos and stocks have had insane runs, and now we're in a really uncertain time. So who knows where these assets can go. Maybe they can keep running like crazy, maybe they can drop, we'll have to see. But across the markets, I'm just not seeing bullish charts like how I was a couple months ago. But yeah, really no edge on ADMP either, unfortunately. Yeah. I will look at FSR. Just gonna check out DocuSign first, and then Neo, and then I'll move back to FSR to probably close out the stream. But if you still want me to look over something, make sure to drop in the chat, because I'm probably gonna be ending up in like 10-15 minutes. So now we have Docu and then Neo. Okay. Docu. Absolutely crazy. Just on a tear. And I'm looking at the 4-hour chart right now. And you could make classic bullish divergence if your MACD starts to go back towards, wait, what did I just do? Alright. If your MACD starts to go towards green, you could make classic bullish divergence. And you already have one level of waning momentum. In terms of a retrace, you were at a 786, which is a pretty good retrace to be at, where prices can easily reverse. And then you also have a pretty decent support at $189, so about like 5% away. But yeah, again, it's just another thing that had a crazy run this year, going from, let me try and start with 2020, going from like $69 or like $70 all the way up to like $300 at one point. So you did sell off a decent amount. You're still in a long-term bullish trend that has not been reversed, or that hasn't reversed yet. So yeah, I mean, it's alright. One could kind of argue that you have like a very weird looking head and shoulders pattern, where you have the head like in this area and then the left shoulder and the right shoulder. But that's not really clear. Usually the shoulders are a little bit higher. So who knows? I think 189 could be a decent reversal level, just because you bounced off of that like 5 different times in the past like 4 months. So you probably want to hold 189 if you get down there. And who knows, maybe you can get down to 189 and your MACD can keep going up and you can get confirmed classic bullish divergence at a critical support. So 189 could be a buy level. Just right now, nothing is too bullish, so just be careful. Now we're going to do Neo and then Fisker. So if you want me to look at anything, request it like right now, because probably after this chart and Fisker, I'm going to be heading out for the night. We will add Mark to the list. That should probably be it. If that is not it, $1.04, let me know. And Neo, a Chinese electric vehicle company, on an absolute tear, running from 90 cents all the way to $30 at 30x or 33x. Crazy, just pretty much a straight line up. And personally, I said at the beginning of the stream, I said it on a chart that was a straight line down, and now I'm going to be saying it on a chart that's a straight line up. I don't ever really trade straight line up, straight line down, just because that's not what a typical swing trader does. That's usually what a momentum trader does. And you know, to each their own. But one thing I am seeing is some buyer exhaustion on Neo, where you're at a lower level on both your MACD and your RSI, but you made a higher high, which means to get to this higher price you had a lower amount of momentum, which is not a good thing. And no pattern. You're honestly just kind of like in a parabola, which I'll go to in a second. And then pretty much the same thing on your daily chart, just showing some signs of seller exhaustion. So be careful. And then let me try and show the parabola. Take out the curve. You started right here. And I'm going to try and make this as perfect as possible. But sometimes TradingView makes it a little bit hard. Probably like that, right? Yeah, it looks pretty valid to me. So yeah, if with the bearish divergence it does fall, you could see some support at, where's the brush? Alright, you can see like support in this region, like $29 to $24. But again, this is just like a straight line up, so it's just so hard to give an accurate reading of the chart, because obviously it could keep on running or it could fall down like crazy. It's just, as somebody who studies technical analysis, you want to see a lot of up and down price movement to try and create patterns and divergences and supports and resistances. Being at an all-time high on a pretty much straight line up, you just don't get a lot of info or data to work with. So in a case like this, it's probably the fundamentals that are more important. You have the bullish fundamental of the mass adoption of electric vehicles starting to take place worldwide, where legislature and people are gravitating towards a clear automobile. And then in terms of the bearishness, you know, the economies are like shutting down, elections tomorrow. So probably just play the fundamentals, and you have earnings on November 10th in 8 days. So I think this might just come down to the earnings and the fundamentals in the markets. Just not a lot to work with on the chart. And then we're going to look at Mark and then Fisker to wrap it up. No divergence on your daily. You had a pretty decent support on your 4 hour. We're almost at one. Yeah, this whole entire like level, like 96 cents to $1, is a pretty good resistance. As you can see, you use it as resistance in September. I mean, support, not resistance. Use it as support in September, and use it as support in May of 2019 and in December of 2018. So $1 is a good historical support, and also just a psychological one. So you obviously want to stay above $1. Again, don't really like that you're under your 200-day moving average. Usually never a good sign to break under it. And no divergence. So yeah, I don't want to overcomplicate anything. You can't really make a double bottom out of this because of how high the center of it went with this 46% candle. So yeah, unfortunately, just a lot of the charts today are not really showing patterns, and I'm not going to just make up patterns. I'm doing this for educational purposes. So if I see a pattern, I'll show it. I'm just not seeing a pattern with this type of price action. So the simplest way to put it is bounce off of $1 or fall under it, and things can get ugly. But that is Mark. And now we're going to move on to Fisker to close out the stream. I started off the stream with Fisker, but I will take a look. Let me just do OPK real quick, just because that last one didn't really have too much. You have really nothing again on the 4 hour, nothing on the daily. You are currently at a deep retrace, but you're not the 7-8. Oh, actually, wait, did I mess that up? Why is the oh, okay, so you bounced off of a 78.6% retrace, and then you ran up like 5% or so, kind of like 10%. I think I messed up that math. And you have a big resistance at $6.43 if you somehow ever get there. But in terms of the trend, you're breaking under an upsloping support line. as you can see, you have this pretty actually, no, you're not. You could actually bounce off of the upsloping support line, where if you like anchor it from here, and then you also have these lows, you're back at this like upsloping demand line. So yeah, hopefully you can just keep on running up this demand line, especially with the bounce off the 786 Fibonacci retrace. And yeah, it's just another one of these charts where like you just want to hold that support and you could see higher prices. But if you don't hold that support, you probably come to test your 200-day moving average. And then you also have like a horizontal support at 290. So yeah, you want to hold this upsloping demand line. If that breaks, you have your moving average and 290 as a support, and if that breaks, you can see much lower prices. So yeah, maybe you just keep on running up this demand line. I'm not sure. This is something you're just gonna have to keep on monitoring, kind of in this range as well, where you have selling at 643 and buying at 290. Obviously, aside from this whole entire drought you had in between, it's okay, not terrible. And then just had earnings on the 29th of October. So that is OPK. Thank you for the chats, VAM. I don't know if I should like VAM. Was that how I was supposed to pronounce it? I'm not sure. But thank you for the chats, VAM. And yeah, finally to close things off, we are going to go through Fisker one last time for Narissa. And on your daily, bullish butterfly harmonic, still very much valid, currently playing out. Could take a while to see the targets of $15 and $18. Like they could literally take months. But who knows? I do like how your daily MACD is going back towards green. And then your 4-hour classic bullish divergence on Fisker is still very strong, not showing any signs of reversing anytime soon. But the issue was you broke over your 200-day moving average, but you weren't able to hold it, like you weren't able to hold over it for a long time. So you fell back under it, and then you bounced off of the 1088 support, which was your resistance back in July before your 100% run up. So now you could use 1088 as support. If that breaks, there is a gap fill to 1066 on your daily, but like 1039 on your 4-hour, and then under that you have the $10 psychological support. So a decent amount of support if it decides to pull back some more. Basically what I was going with in the beginning of the stream was, if with the elections Fisker reacts nicely, or like just the market is okay, I think we're going to retest 1181 and 1249, which 1181 was your support in August and 1249 was your support on September 4th and September 24th. So if the macro is okay, you're probably going to go test those next. But if things get ugly in the stock market due to the high amount of uncertainty, 1088, 1066, 1039, and $10 are all support. So you have a pretty good support in the $10 range. So yeah, that's Fisker. I mean, we'll see what happens. Yeah, I mean, the macro is still beautiful. It's a great looking chart. I don't like how the MACD is starting to move down a bit, but you don't have any bearish divergence. It's just cooling off a bit after the 40% run up. So yeah, you have a lot of resistance over you, a lot of support under you. So what you probably could maybe see is just like a channel for a couple of days, who knows. With the high amount of resistance and high amount of support, you just might get that middle price and you might stay in the 11 range for a couple days. We will have to see. The issue is, I don't think a lot of stocks are going to be steady this week. I think everything is pretty much going to be volatile. So hold over 10 and it's fine. And then hopefully it can break, 1249. And if it breaks 1249, there really isn't any resistance until 1355. So breaking 1249 could be huge, but we need to get there first. But yeah, that pretty much wraps up Fisker and the rest of the stream. About, or a little bit just under an hour tonight. Thank you guys for coming out. Remember, if you haven't already, hit that subscribe button. And I hope you all have a good night. Trade safe tomorrow with the elections. And I'll see you next time.